Yeah, I think it makes life especially difficult for people who are in the cities. Probably in some of the smaller places it's not so bad. I mean, Sher Khan has 3 to 4,000 employees, but we are spread over so many cities. Some of the smaller cities people can travel to work in 10-15 minutes, not a problem. But in big cities like Bombay, it's definitely going to be an issue for almost 70% of the people or 80% of the people, because they're traveling 1 to 1.5 hours to work, and that becomes difficult. And what I can't really get is that if you're really looking at price discovery through derivatives, as you were discussing earlier, then probably just keep the derivatives market open early in the morning, because it's the cash market that really drives direction and actual price discovery. So if people just want hedging opportunities, then probably just keep the derivatives market open and not the cash market. I think that would more or less solve the problem and keep different segments a little more comfortable.
That's interesting, because generally the takeaway from our conversation with all three of you is that, you're not wildly excited by the move, but Ashu, on the other hand, sees, the initial hurdles being crossed. I want to go back to today's trading session, gentlemen, and what you expect is 51.81, a pretty strong glass ceiling. Exactly the question that Rajesh was posing right now.
Yeah, I think it is. Last week's weekly chart showed what we call a doji star, which is essentially a complete loss of momentum on the upside. So after seeing that, I think one thing is clear, that there is no upside potential beyond the recent highs of 51.80, which is almost a double or triple top now. So basically you're looking at downside potential, and there can be varying views on how much downside potential exists, because there are some people who also think that this entire move since March is essentially part of a larger bull market, and even after some correction it will continue. On the other hand, I think there are larger business cycles at play. If you look at global cycles and domestic cycles, I think you could be in for a difficult period which could last for 3 to 6 months. It's not just going to be a small correction and it's done with. I think it will be either a long period of consolidation or a deeper correction in the market that you need to be prepared for from these highs. So you're going to be seeing a lot of rotation, and I think you've already seen a lot of rotation. So there's very little space even for rotation. But you're going to see a continued period of selling or profit booking, which could see the Nifty probably go a little deeper than what most people would anticipate.
When you say a little deeper, what do you mean, Rohit? Just a number?
Yes, when I'm saying deeper, I'm saying it will probably go below what we saw in October. We saw a low of around 45.50. I think the potential is really to go much below that, maybe closer to the 4,000 mark.
Let's just start off with what important stocks you're tracking as far as purely on the technicals are concerned. Do you think anything could be exciting this morning? Again, we've been stuck in this range for the last 2 weeks now. Do any of the stocks look good to you on the charts?
I think the number of places to hide has become extremely limited. Earlier I would have probably had FMCG or probably sugar on my list, but I think now the only sector where there is some strength left from a medium-term perspective is probably pharma. So I think pharmaceuticals like Dr. Reddy's are the ones that could probably still have some upside. But apart from that, I don't see a lot of strength really in any particular segment of the market.